Well, welcome everyone. Welcome to the first webinar of our global knowledge sharing webinar series on earned wage access, a new solution to a node problem, advancing wages in the fintech era. This webinar is results from a study that we conducted at the ILO Global Center on Digital Wages for Decent Work on this interesting emerging financial service called Earned Wage Access. I will not anticipate what it is about. I will let our panelists explain to you, and we plan to have an interesting conversation on how it works, the benefits it may bring for workers and employers, but also some of the risks and what can be done to ensure that it is delivered in a responsible way. For the welcome remarks, I would like to invite Craig Churchill, head of the Social Finance Program, to introduce the work we are doing on this topic in the ILO. Thank you, Craig.
Thanks, Andre, and greetings, everyone. I'm Craig Churchill from the ILO Social Finance Program, where we look at how the financial sector can contribute to promoting decent work, how it can create jobs and improve working conditions. And 4 years ago, we launched the Global Center for Digital Wages for Decent Work, recognizing that there's a need to enable employers to be able to pay their workers into bank accounts or into mobile wallets, prepaid cards, but to pay digitally. And this is an important part of the formalization process, both formalizing employment contracts and also formalizing the relationship between employers and their workers. And the center has been working in a number of countries to be able to work with both employers and with workers to be able to encourage them to adopt digital wage payments. And one of the important parts of this agenda is really understanding what are the obstacles, what's inhibiting employers from taking this on, and what's inhibiting workers from wanting to be able to be paid digitally. Because the more that we can better understand the root obstacles, we can explore ways of overcoming those obstacles. Well, one of the key issues you find is usage, and that employers are, if they are paying digitally, workers may end up taking all of their money out of their bank account on payday and not using the financial services. And so wanting to be able to better understand how to make their bank account, their mobile wallet, more useful to workers, we started exploring what were some of the add-on services that might be possible to include to be able to facilitate or encourage utilization. And in that effort, we did a deep dive into the earned wage access agenda, which is really just fascinating. It's a way to be able to enable workers to have access to wages they have already earned, but before payday. And it's fully digitized, and it illustrates how payroll data can facilitate not only access to finance, but also the development of more tailored financial services. By leveraging payroll data to better assess risk, financial service providers can potentially offer more affordable and relevant financial products to both workers and employers. But this good opportunity also has some risks that it could be overused or used incorrectly, or that charges may be excessive. So there's definitely an important issue around regulatory and consumer protection that needs to be looked at very carefully. And there's also the risk that workers don't understand what the risks and opportunities are. So there's an important agenda for financial literacy as well that needs to be taken into consideration. So that's just sort of setting the scene a bit. I'm excited for this webinar, and we'll have a good opportunity to hear about some real practical experiences on the ground with a slew of very interesting panelists. Thanks, Andre. Back to you.
Thanks a lot, Craig. So I would like to invite our speakers for today. They, as Craig was mentioning, are people who know very well how the service works. So Soumya Dhanaraj is an associate director at the Good Business Lab. Welcome, Soumya. Lisha Ezra is the committee chair at Apindo, the Indonesian Employment Association, Organization. Alex Kim, the founder and CEO of Paywatch. This is one of the biggest, if not the bigger, EWA provider in Southeast Asia. And Pradio Komaragiri is a manager of 60 decibels. Pradio has partnered a lot with the ILO on our efforts to try to understand how this service actually works. I am going to start with Alex. So Alex, you are, as I said, the founder of one of the largest providers in Southeast Asia, and you are operating across multiple countries. You have firsthand experience with earned wage access for quite some time now. I would like you to really set the scene, explaining to us, to the audience in this webinar, what is EWA?
Thank you. Thank you, Andre. Thank you, everyone, for having us. As Andre mentioned, I'm Alex. I'm co-founder and president of Paywatch. Paywatch is a neo-financial institution out in Southeast Asia. We're headquartered in Malaysia, but we've really deployed our services throughout Asia, including the Philippines, Indonesia, South Korea, Singapore, as well as Hong Kong. From the beginning, we were really dedicated to providing social finance for the underserved. And one of the first products that we really launched was earned wage access. Earned wage access can be best described as on-demand salary. So how there are many models out there, but for us, we are a pure earned wage access player, which means that we are a B2B2C business model. That means that we onboard large companies or businesses as our clients. We'll integrate with them in one way or the other. We'll track how much work the employees have done. And then for every day of work that's been performed, we would allow employees to accrue credit for a part of the salary that they've earned to date. And anytime through our app, when they initiate the withdrawal function, they would be able to instantaneously receive that part of the salary or however much that they would wish into the same salary account that's aligned with the HR, that the HR is already paying the salary. So that's sort of the basic sort of plain vanilla, pure B2B2C earned wage access product. Paywatch from the beginning decided to make sure that the fee is the lowest in the market. We only charge a nominal fee of around USD 50 cents per transaction, no late fees, interest, or any other charges, which is an incredibly important aspect in order to make it an accessible product that's available to all. This product is particularly impactful in markets where we are operating, where there is a severe lack of short-term, low-cost liquidity solutions, right? So if you in markets like Philippines, Indonesia, or even to a certain extent Malaysia, access to somewhat common in the West products like credit cards or charge cards are simply not available. Moreover, even though they may have hundreds of banks in these countries, even though it's in some ways overbanked, it is the employees and the population is severely underserved. And so in these situations, employees that we have been serving were turning to really high interest P2P loans or extremely high interest, salary loans that might be out there. Or if they couldn't get that, they would turn to their friends, family, and even in some cases, their colleagues as well. So these are a huge social milieu that is also a pain point for the businesses. And so we believe that earned wage access, when it's structured responsibly, can help both the HRs retain and recruit great talent, help the employees have access to a very impactful financial tool, and service the ecosystem overall.
Well, thanks, Alex, for this super interesting and comprehensive introduction. I'm moving then to Lisha. Lisha, you represent the employers organization in Indonesia, Apindo. I know that in Apindo you have explored AWA before, and I would just like you to tell us a little bit more of this service from the perspective of employers. What do you think it's the appeal of AWA for employers? What are the business problems that it's trying to solve?
Thank you, Andre. Apindo is Indonesia's largest employers association. So we represent thousands of enterprises from small businesses to large corporations. And looking at how digital wages are being paid, so it's a transition into digital wages. So EWA is emerged as an opportunity, but it's also a challenge. The business case is compelling if it's done right. I mean, some research is showing real benefits for the employers, productivity increase because, if they have access to responsible earned wage access services, the workers are reducing their financial stress. Otherwise, they'd find, gigs and they'd just not be present. But then what we also see is, as previously mentioned, earned wage access also addresses, HR pain points. The administration burden of, handling wage advance requests, takes a lot of time. And then it's also inefficient to have, a lot of people manually approving things. So EWA, I think it's providing a systematic alternative that could be transparent, that could be scalable. But then in Indonesia has also unique challenges because, as I mentioned before, over half of Indonesia's workforce operates informally, sometimes with no formal payroll systems. So it makes it difficult for the earned wage access to be operated. But this also creates a two-tier system that could worsen the inequality. And, we haven't even touched into the cultural resistance, whether, people are used to monthly payment traditions, the Islamic finance concerns about fee structures, and then also the potential disruption to family planning systems when they're used to monthly, cycles. And also with the regulatory reality, this is something that, as the Employers Association, we work closely with the government. And, there are questions about compliance gaps that the employers must navigate. It hasn't been integrated to the tax authorities' reporting systems for the income taxes, the treatment towards the earned wage access, fees that would has an impact on the income tax reports. And then also the VAT uncertainty from the service providers. So there are challenges and legal risks that we're still trying to navigate. I mean, we recognize it offers real benefits, but it's also something that poses risk without proper, safeguards. And it's not just for the workers, but it's also for the employers when they have to look at, system integration cost, the legal responsibilities, and then also the reputational risk if the workers experience, more harm because of services that's not designed properly.
Thank you, Alicia. So I think one of the main highlights of what you're saying are really the challenges on the integration side. And Alex, I'll get back to you. EWA is in a way really about data sharing and technological integration between employers and fintechs and financial service providers. Could you just tell us the kind of the step-by-step on how that works and how you work with employers to integrate the service and make it available for the workers?
Absolutely. Andre, thanks for that. Just taking a step back and in terms of how it really works. For Paywatch, first step is, of course, onboarding the corporates. Typically, we actually work with large corporates, and Alicia, I think this also kind of gets into some of the concerns and issues that you raised. But typically, large corporates will always look at compliance, due diligence, regulatory compliance, as well as these data security measures. That's something that's extremely important to them. More importantly, for organizations like myself at Paywatch and others like us that are operating in multiple markets and typically for larger corporates, and some of them what might even include plantations as well as the agrarian workers. That also includes some daily workers and informal ones. How it works really is first going through the accreditation of process with the large corporates, onboarding them, signing a contract with them, and it is for Paywatch, our earned wage access is positioned as a true employee benefit. And so we'll work together to customize the solution, make sure that the HRs and us are aligned on who within the organization should have access to this product. Some employers would prefer to not let regularized employees receive it, for instance, and as well as design the limits together. The maximum limit that we are comfortable in providing is at 50% of your base salary only. The idea is that this should be your first go-to side pocket in emergency situations, or where you wanted to actually use this tool to manage your day-to-day expenses, right? And so what the most common design that we will find is employers will decide between 30 to 50% of their ongoing earned wages to be accrued through the system. So if, let's say, it's 50% of the base pay, if the employee has worked 2 days in the work month, on our app, they would see 1 day's worth of base salary only, not accounting for OT or other sort of leave periods on the app. Thereafter, this integration part, there's many ways to do it. There's of course the fully automated way, where you integrate with their HR systems or a middle layer that some of the large corporates might have. But there are also other more, if you will, manual ways that they could decide which of their employees get this and what sort of information they would pass on to us. And so you actually have to really accommodate all spectrums of what the employers are comfortable with. They have different compliance regulations, data privacy regulations, depending on the jurisdictions and companies. And so you do have to provide an entire suite of options for them. And getting on to the data privacy side, if the data privacy structure is not as secure within the companies, we will always ensure to get a consent from the employees and receive the information from them, and then thereafter validate it with the HR departments to make sure that there's no frauds or other instances. The key to making this successful, though, is to make sure your tech stack is able to accommodate all of this and process it in real time very quickly and efficiently and easily for the employers. Yeah, I mean, hopefully I didn't bore too many people with the operation.
No. Well, we were discussing this when we were preparing for the webinar. This is actually very important, especially for the employers who may be watching
Yes.
this, because understanding how the service is put in place is actually critical for many of the discussions we are going to have next. And you were talking about data privacy and the perspective of the workers and ensuring that their data is protected. I really want to then pivot the discussion to the workers' perspective here, and I'm inviting Pragyo, who with 60 decibels has done a lot of work with providers across the globe in partnership with the ILO. What have you? Please first tell us a little bit about the surveys that you conducted, and what have you learned about the motivations of workers for using a service like earned wage access and the kind of use patterns that you have observed. And do you really think that can have an impact on their financial and mental health?
No, thank you so much for that question, Andre. And I think, yeah, as quick background, we at 60 decibels, we do impact measurement work. And with respect to this area specifically, we've run 5 surveys with 4 service providers across Africa and Asia, and one of whom was actually Alex, who we worked with to understand the impact of Paywatch's model on its end users as well. So what essentially the scope of these surveys were to look at exactly what was motivating the users, how were they using the service, their satisfaction with it, and the value that they derive from it, and then moving on to how this was fitting into their financial well-being, financial planning, and how that impacted their quality of life, as well as any sort of improvements or changes in the financial resilience that they experience. So pretty much a broad scope, but essentially what that allowed us is to kind of comment on the entire value chain, from like what exactly was motivating them to what that ended up being in terms of manifesting it in their life. So what we saw was, in terms of motivation, is a majority of the users that we spoke to were using it to smoothen their expenses without depending too much on traditional credit, because traditional credit is harder to access, has higher barriers of entry in terms of being able to tap into that. But more importantly, they also, many users perceive it as borrowing from oneself, which is actually something that they valued, because sometimes borrowing from informal sources, particularly family, friends, can become tricky because of other social pressures there. So what people reported was that this was actually allowed them to have a sense of dignity, allowed them to have a sense of purpose in terms of being able to tackle problems that came up using their own means without depending on others, which was a very critical motivation that we saw. And our data also shows that as people got access to this, they started moving away from other sources of capital and depending on this a lot more, because it was fast, it was accessible, and it was easy. And in addition to it being a source of their own finances that they're borrowing from. In terms of the use cases, by and large, what we actually saw was the primary use cases were people using it for more day-to-day and regular expenses. So these included for essentially using it for grocery purchases, transportation, fuel expenses, utility expenses, and even spending on small education-related expenses as well. But then there was a non-trivial number who used it exclusively for emergency purposes. So in case there was any sudden emergency health expenditure, or for example, if they were using a vehicle to commute to work and that vehicle broke down, and to get it repaired without having to worry about it too much, they would use it for these sort of purposes. And as you can see, based on these use cases, what we actually see is that one of the first self-reported outcomes from the users is a very positive impact. A lot of them reported that their financial stress has reduced because they're now able to meet these needs in a timely manner without having to borrow from others, or without having to borrow from sources which entails higher repayment at the end of the day. So that was one critical thing. And they were essentially using that to manage their day-to-day finances, smoothen out their expenses, how do they respond to their expenses. And also in the cases where they were used only for emergency purposes, it was a vital toolkit, input into their toolkit to respond to any emergency, whether it's small or big. Now, in terms of one interesting insight that I wanted to just call out is we also did one in-depth qualitative study with some users, and we found that when people had access to social protection mechanisms, either through their employers or through the government, the use cases shifted to areas where they didn't have access to social protection mechanisms. So in this case, a lot of the users actually got some support from the employer or the government in terms of basic amenities. But when it came to the school-going children in the household, they were not getting support. And a lot of the use cases were around spending on education-related matters or food for children when they're going to school. So that's something that we also saw coming out quite clearly in our data.
Yes, I mean, I think this is interesting and a point we'll definitely come back to. EWA is not offered in isolation, right? It's really about how it helps workers manage their financial lives in very different contexts as well, and with access to different social and labor rights. So Soumya, in the Good Business Lab, you also conducted research on earned wage access, but it has the particularity that you were also testing and piloting an earned wage access solution. So I would like you to just briefly explain what you did and highlighting some of the findings, but also there is an issue, I think a particular issue on the impact on women that I would also like you to explore a little bit further.
Yeah, thank you, Andre, for having me. And at Good Business Lab, we focus on worker well-being, especially for blue-collar workers and industrial workers. And one of the areas that of well-being we are looking at is financial well-being, and that's how the Earned Wage Access project came through. This project was implemented in one of the factories in a rural North Karnataka in India. It's a southern state in India. And one of the things I first want to emphasize on is this earned wage access product did not need workers to have mobile phones, and that's the first barrier that we broke in this product, because this product was enabled through tablets that were placed in the factory floors, and it was connected to the factory's Wi-Fi. So workers, even if they did not have mobile phones, even if you do not have documents, by the virtue of being in a workplace, in a formal sector workplace, you are able to access these earned wages, which is otherwise not available to a lot of women because of these access barriers. So this is one of the things I want to stress upon. And what we found is that we did this field experiment over a 13 months period, so it's not based on a snapshot, but we have followed workers every month, and then we had high frequency surveys which captured every month what they borrowed and whom they borrowed from and so on. One of the things, again, to Alex, is that there were 30% of workers ended up borrowing from their co-workers in the factory. So that's the amount of reliance that women have on informal circles. That's something I want to emphasize on as well. So when we introduced this product, there was a reduction in informal borrowings. In fact, there was a reduction in informal borrowings from co-workers as well as family members. And women said that they had gained a sense of confidence, a sense of empowerment, because they now have to, as Pradyut mentioned, that they borrowed from themselves and they don't have to lose their dignity or show their vulnerability to others by saying that I want to borrow such and such money from you. That's first thing. The second thing we looked at is the firm outcomes, because there are interesting, like Alicia already mentioned, that there is definitely going to be the financial stress angle, and financial stress is so important that affects your daily routine and productivity at work. And this is something we show that, in fact, the workers who were financially stressed were the ones who most used the product, and the productivity of those workers went up by 17% in a span of 6 months. And that's the ROI that you show for the employers through our paper. And this is again only again, the product was given to women workers, and then we were able to improve the usage by breaking the barriers. And I want to again emphasize that that's very important when it comes to women.
Well, thank you so much. The results are very impressive, and the study is very interesting. I definitely recommend that you all check both Soumya's and Pradyut's studies at 60 decibels and the Good Business Lab. I will keep talking about the workers a little bit, but just asking the speakers to be a little bit shorter on the next rounds of. We had the first ones were more open for you to present, but now we need to be a little bit more specific and targeted. Pradyut, we discussed the benefits. I think the benefits are very clear. They are very well outlined. Lisha also mentioned the benefits for the employers very clearly, but we also know there are a few risks, right? And one of the risks that you mapped was workers using it multiple times, sometimes multiple times in the same month. There is clearly a concern regarding over reliance. What are the key risks that we should be watching in this specific regarding this specific service, and what kind of negative impact it can have on workers?
Yes, that is the flip side of whatever I just shared before and what Soumya shared before as well. I think another metric that will help us triangulate the over-reliance aspect is we ask people whether they need to continue using it even in the future, and in the absence of it, what would they feel? And at least half of the people that we spoke to mentioned that it would severely affect their financial planning. So in addition to actually looking at the frequency, we're also seeing self-reported outcomes from the users saying over-reliance is something that is quite present among them as well. In terms of the actual risks, a lot of it does stem from a lack of awareness of key service terms, and especially the service terms around the cost of accessing such a service, or even in terms of the frequency or to what extent they can access it. For example, in the case of Paywatch, because of the nominal and flat fee that they have, it's actually quite easy. But we have seen business models and other service providers where it's based on frequency of usage or how much they're accessing as well, which essentially means if that is not clearly and intuitively explained, or even if it is explained, it is not disseminated to all sections of the users, that can lead to over-reliance, which can have a financial impact. That's something that's a real risk. The other thing that we are seeing is over-reliance can potentially come at the cost of longer term financial planning among these users. So because this is something that allows them to manage on shorter frequencies within the month, within the pay period, this can have an impact in terms of longer term financial goals that people might want to save and invest for. While there isn't enough evidence to prove either way, that's something that is really on top of our mind as researchers to kind of understand and validate and verify this.
Thank you. Yeah, we definitely have a research agenda on EWA that has still some years to go, I hope. And Soumya, you did in the research that you did, I imagine you also came across some of the same risks that Prajil mentioned. But as we said before, you were also implementing it. So how did you go about managing these risks, both in terms of the assessment you were doing and also in terms of the operational, the putting in practice of the service?
So one of the things that we did before we rolled out the product is to emphasize that the money withdrawn earlier is that much less when you actually come to the payday. So that this was so much emphasized during the training, and then workers were asked to use it very prudently. The second thing is that there were definitely limits in terms of the percentage of wages that you could withdraw, that was capped at 50%, and it was capped to 3 times in a month, and it is also like only for certain weeks of the month and so on. So these actually in our study, surprisingly, we do not find any impact on overspending, regretful overspending by the workers, and we also did not see that the savings was dropping. In fact, if anything, savings was almost the same as the workers who did not have this intervention. But one thing I want to emphasize is that there were very few percentage of workers who actually converted their pay cycle from once in a month to twice in a month or so. And I think one of the things we need to study further, as you emphasize, is that it might be that the option is helpful for certain type of workers, because some workers do have bi-weekly payments and some workers do not have, and the workers' family members also have different pay cycles as well. Some of them have family members who are daily wagers, who have a monthly salary. So it really depends upon the dynamics of the household, and that is something we do not know that it is how much is over reliance a problem once we put all these limits in terms of caps and limits in terms of, and also train workers on how this can be used. So yeah, that's something where we found from our work.
Thank you, Soumya. We will get back to all of these risks in a minute. Let me just bring Licia back into the discussion, because we are talking about the risks for the workers. You already mentioned some of the risks for employers in your first question, but do you want to also get into this discussion a little bit more and talk about how you as employers perceive the risks of a service like EWA?
Absolutely. So the employers face risk that sometimes they don't fully understand it until it's a little bit too late. For example, when it comes to technical and operational risk, systems, sometimes when they advertise, it says it's very easy, it's easy to integrate. But then if the employers then face compatibility issues, then it leads to calculation errors. It leads to sometimes employees are not satisfied, and then this also then creates potential legal liability. And then also sometimes many employers underestimate the technical preparation that's required. It's not just plug and play. They also need to put resources together. So we get questions about this, and then some hesitance from smaller businesses with less resources. The other risk from the employer's point of view is also the legal and financial responsibility. The legal responsibility to pay the workers remains with the employer, regardless of the provider's performance. So if the provider fails to transfer the wages, for whatever reasons, technical, cash flow issues, even going bankrupt, the employer is still legally required to ensure the workers receive the full wage. So from the employer's point of view, it feels a little bit like guaranteeing a third-party financial service with our company's liability. And then when it comes to the regulatory compliance from the employer's point of view, employers who are implementing possibly earned wage access are operating in a gray area that could result in penalties if frameworks are established and with lack of understanding. And the labor law compliance, because if it's unclear, does the frequent wage access alter the obligations of the employers under minimum wage regulation, for example? And then we haven't even talked about reputational and worker relationship risks. And also with the SMEs, given that Indonesia is a majority small and medium enterprise, the capacity and resource challenge represents an amplified set of risks, lacking the digital infrastructure, lacking the financial resources to properly vet the providers, ensuring data protection because of the sharing, and also supporting their workers with financial literacy. But then these people who work for smaller businesses are often the ones who need these services most. So, within the association, we're trying to develop some kind of a, evaluation framework for providers. Are there any emergency guidelines that we need to prepare? And also working with the regulator on this. Basically, I mean, the employers at the moment, we can't treat earned wage access as a benefit offering only, but it needs active management to also look into, realizing the benefits, but also managing the substantial risks to the employer.
Thank you, Lisha. I think this is a very good cue for me to remind everyone that next Tuesday, also at 2 p.m. Geneva time, we are going to have a webinar to discuss the regulatory challenges on earned wage access, which are many and a topic in itself. Don't miss it. And I'll get back to Alex, because Alex, I think you now, I'll even give you a little bit more time because you've been patiently listening to all the benefits and all the risks. And I know it's a lot of information. It's a very interesting topic, but we still struggle to fully understand the impact. But I also know that the providers and all the providers we've been talking to, they are aware of both the benefits and the risks. They are very passionate about the service that they are offering. And so what have you been doing, you in Paywatch, but also in the sector, to maximize the benefits and help employers and workers manage the risks? Yeah.
I think one of the biggest takeaways that from when Pradyut and 60 Decibels did a review of some of 2,500, I believe, of our users that was reached out to. I think one thing is for sure, if you actually deploy this in a responsible manner, it proved that the vast majority of employees felt that their relationship with their employers actually improved, right? And that's because by providing this service, the employers is actually showing the employees that they actually care about their financial plight. Now, in order to address the risks, I think there are clear guidelines that we've really kind of initiated over the last few years, is really following the lead of a lot of the HR departments. I mean, Alicia, it's absolutely right that a lot of companies this is still a new service. People really kind of mistake this also together with salary loans and the like. And there is work involved on the HR side. But the idea is that you have to make that work minimal. And if they don't actually have those services, the provider also needs to be able to provide customer support to actually do the work for them. So that's also like a very key learning that we also had. In order to deploy this responsibly, for the most part, in our experience, most HR departments actually really care for their employees, and you are deploying this because they want to actually benefit for their employees, right? Benefiting your employees means that they will likely stay on the job longer, retain the best talent, and also be able to recruit the best ones as well. And so there are definite safeguards, like Soumya mentioned, in terms of the limits. Typically, we're actually seeing around 30% of the base salary being utilized for this purpose. But another aspect is actually through this service, how can you actually really serve as a bridge between the employees that are underserved by the large financial institutions to connect them to opportunities that they otherwise would never have, right? So what Paywatch did was really tie up with large financial institutions like Citibank and HSBC that's actually funding us for this service, but also with like insurance providers like Zurich Insurance, FWD, which is also a large insurance provider, crafting together with the banks high yield savings accounts, providing micro health insurance for their families that otherwise they wouldn't be able to enroll into. Essentially using this small pocket of money, but making sure employees are actually using it in a responsible way to pay for your utilities, enroll into health insurance, get financial services, savings accounts, and other opportunities that otherwise they wouldn't be able to do. But one sort of guiding principle for us in this journey of really expanding the service was really like listen to the experience of the HR, especially those that have been in that company for decades, as well as listen to the employees' concerns and what their needs are in order to craft it.
Thank you so much, Alex. Raju, I think it's pretty much the same question. What do you think can be done or should be done to make sure that the EWA is delivered in a responsible way? What kind of features the service should have?
Yes, I mean, I have very limited experience in product design, but from our data, we are seeing a few interesting sort of insights, which I think practitioners anyway are starting to incorporate or will end up incorporating in terms of what they offer to the end users. One of the key things that we are one key areas where people can move forward in is actually financial education and providing some sort of a space to help these users get better at financial management, budgeting, planning out, aligning with the financial goal and planning towards it. So I think some way in which they can upskill and learn more about how to do these different things is one clear way forward. And maybe just to build on top of that, also given that they have access to these workers, they can also give them the space to also act upon this. So once they learn something about how to budget better, actually using that to help them plan and budget their salary much better, or like if they have a goal, outlining that through the application that they're working through and helping them save in addition to also accessing EWA on the side. So all of this is to say that this could be the start of a bundle of services that can build on top of each other and stack, which will allow these users to like really realize the financial benefits of such a service, and also in the long run, like build a sustainable roadmap towards better financial well-being.
Thank you. And Soumya, what about you? What do you think should be done to make sure the impact is positive and the delivery is responsible? And if you can be more specific about gender and how we can make sure women workers are profiting from this.
Yeah. I think the speakers before me emphasized a lot on after you introduce the product, what are the things that you need to take care of. But one of the things I would like to emphasize here is that we were able to get 30% of women use it in at least once a year because there was a hand-holding and support given to these women throughout the period. And that is something I really want to emphasize. If you want to have financial inclusion till the last mile, you need to go on ground. Oh, there are some problems you would be able to solve digitally, but there should be a case where on ground presence is also available whenever workers need it. And also both factories and EWA service providers should come together to make sure that all the workers, even if they are not digitally financially literate, will be able to benefit from this. For instance, one example I would give is I remember watching a woman worker who was just standing few feet away from the tablet because she has never used a device like that before. And then with the constant support and then encouragement, that's when she started using it. And there were few workers after using the tablet, they went on to purchase their own mobile phones because now they felt confident that this is something they can use on their own. So this is the level of training and handholding and support that some workers at the bottom line should be provided. That's first thing. And coming to Alex's point and Alicia's point on employer support, even after we had implemented the earned wage access in the factory for more than a year, even after that, when we were going to withdraw from the study and we wanted the factory management to take over because factory management did not want to stop the service for the workers because of the demand for the product, it took them even more few months to learn how to tackle the product, allocate resources for the product, even train them and provide on-ground support for the workers in the factory. So it's not just the workers, even the factory managements in the rural areas specifically need that kind of a support to make sure that there is a positive impact. So this is something I wanted to leave with. If it's last mile, truly make it last mile by making that support possible on ground is something I would want to emphasize.
Thank you. And Lisha, before we go to the Q&A, from the employer's perspective, how do you think you can collaborate better with the providers to ensure the provision of the service is responsible?
I think the current collaboration reality is that in many markets, including Indonesia, I suppose, the employers are treated or functioning more as data providers instead of active partners that co-create with the providers. So then this is sort of like the minimal employer involvement, even though we're actually a critical part of it, beyond providing the payroll data. The employers are not really asked to be a partner in this. But this is flawed and risky because of many reasons, especially when it comes to the SME. So we could see the benefit. It helps the SME cash flow planning with the third-party support. But at the moment, the collaboration realities are not as inclusive. It's not an inclusive co-creation mode. What could be a possible future and having an effective collaboration means that we're not just facilitating payroll deductions, but also actively involved in the provider vetting and selection, evaluating that prioritize for example, fee transparency, what protections for the workers are available, and so it's not just the operational convenience. And then it's also the impact monitoring that's required. The workers' financial health outcomes, is it helpful? So it's not just satisfaction of the services scores. We still need evidence that earned wage access is improving the financial well-being. And then, of course, when it comes to the complaint resolution, so what are the clear channels where workers can report the issues to HR, employers having the capacity to resolve some of these problems? So for the employers, I mean, yes, the technical integration could be complex, it could be time sensitive, but the employers also need to be investing into digital infrastructure, ensuring payroll systems are robust, secure for data sharing, and this could take us several months. So it might be a challenge there. Plus also building the internal capacity of the companies. The HR teams need training on financial wellness, and HR teams are sometimes coming from psychology background or coming from legal background. And then understanding AWA mechanics would be something new for a lot of HR personnel.
Definitely.
Yeah.
Yes. Well, thank you so much, Lisha. Here at the ILO Social Finance team, we are all for the involvement of employers in the provision of financial services for workers. This is, I think, a point we always highlight, how important it is that employers take an interest and take action to ensure that workers are having the best financial services that they deserve. We do have a few questions from the audience. I'm going to start, and they are not easy, I have to tell you. I think the audience is really pushing you. But the first one is about the differences in the provision of EWA in the different regions. I don't know who is the best person to answer to that. Maybe I will. Praja, do you want to try to take that question on the different models, given that you have done research across multiple countries? Do you see differences in the regions, especially regarding the impact of the service?
So given that our studies are snapshot studies, it's hard to really comment rigorously on the impact. But what we are seeing is, depending on the model and the complexity of the business model, the awareness levels are quite different. So in cases where it's simple, straightforward in terms of what the terms of service are, what are the cost of accessing service, awareness levels tend to be much higher, because communicating that even for it's something that even, for example, employers or HRs, if they're not as involved, it's easy for users to still pick it up because it's just a simple 1-line or 2-line fact. But when you start bringing in more complexity in terms of this is how much it costs based on your usage, and then there's variations of that, we see the awareness levels are much lower there in terms of service provision, and also a critical point what Lisha mentioned, which is awareness of how to resolve issues once you face them. That is something that is also that we find lacking in many cases. So all of this is to say that I agree with what was mentioned earlier, that HR and employers are critical ecosystem players to actually enable this awareness levels, which will help them actually utilize it and use it responsibly. But even in their absence, if the model is simple enough, there is still some space for the users to still kind of engage with it responsibly. But that's the main variation that we've seen. In terms of the impact, I think we just need, at least from our studies, we just need more data to comment on it more robustly.
And Alex, do you want to comment? I know you are connected to so many providers across the globe. Do you see differences in the different regions and the different providers you talk to?
I do see, well, if you're looking at a pure B2B2C earned wage access, on its face, it's almost exactly the same in the sense that you tie up with the companies are repaying, the provider is providing the funds to the employees first, and then the companies are repaying, right? That's sort of, that overarching structure is there. But we have seen, and this is kind of, getting to some of the concerns and risks here. I believe that that earned wage access should be this B2B2C model, right? But then there are players that we have seen in the market where it might just be a loan, a B2C loan with a very little involvement from the employers, which will essentially become just like a microfinancing system. There are also, of course, there are nuances on the regulation side in terms of the required information that you need from the employees to get the system going as well. And I've also seen some cases where on its face, it may seem like it's just an access to a portion of the wages, but then it will kind of route towards like a loan, like a multi-tiered, multi-month loan, right? These are all kind of practices that are usually not aligned with the HR departments, and quite risky for the segment as well, right? So these are sort of aspects that we've seen. Otherwise, I've seen cases where you're tied up with a bank and the provider is essentially a white labeler for the banks as well. But just to answer one of the common sort of risks that I've seen during the seminar, I think one really, really important part for earned wage access player, no matter where you are, is that you have to have access to a very consistent funding source in order to fund this massive demand that actually comes from the large corporates as well as their employees, and to be able to reliably fund this system, right? Because the companies will not pay for this from their balance sheet in most cases. So highly recommend for any player out there engaging into this, if you really want to do this the right way, legitimately, in a really reliable way, you do have to have a major bank or financial institution that's behind you in order to really be able to scale this in a reliable manner to the end employees. Oh, Andre, I think you're muted.
Thank you. Yes, thank you. And I think that also answers the second question, which was on EWA being in certain regions also more consumptive as a product. And I think, yes, in some cases it can be, as Alex was saying. And for us, it's really critical that we find the best business models for providers as well, the ones that really maximize the benefits for workers. Lisha, I'll ask you, one of the questions here is about what is the impact that EWA services can have, for instance, on the formalization of workers and employers. Do you see that formalization may be a positive outcome here from EWA, an unexpected positive outcome?
The formalization, obviously there are demands, businesses want their workers to be happy, and so we're trying, through the collaboration that we do, we're trying to digitize wage payments quite a lot. But also the maybe unintended impact would be the patterns, like in Indonesia. I mean, this goes to the previous question also. Indonesia, close to 80% uses AOL for daily expenses, not really emergencies, and then a new advance, one day after the payment. But then this also changes the way we should think about the regulation around it. It's not culturally neutral. What works in the US or in India may not work in Indonesia. So when it comes to the impact, I think we also need to look at the cultural impact as well. And that's why we're advocating for, more localized, no one size fits all, but it starts with the formalizing first, and then I think we'll see. I will have to see how the dynamics work. It's, it creates a lot of debate at the moment.
I think it's another point to our research agenda. Actually, we have already many. Soumya, I don't know if you want to also comment on that. Wow, if you see that there may be a potential positive impact on, including access to social protection, formalization in a broader sense.
At least in the case of India, it is not. It is mostly available to only formal sector workers, and very very few, in fact. It is still longer in the in the timeline, I would say. But even it is definitely helping in formalization in the financial sector. That is one thing I would say is happening, because as regulatory norms kick in, then workers leave a footprint because of the earned wage access use. And because of this, a lot of workers who never had credit score histories are now being able to build their credit scores. And this is one of the ways they can enter the formal financial system. So
Yeah.
that is something we have seen, at least I can comment on that.
Yes. So formalization in terms of access to finance. I wanted to give you all a chance for closing remarks or concluding remarks. It's really 30 seconds per person, and it's a tricky question. So I think you can be very specific if possible, but it's how do you see all of you are financial inclusion practitioners in a way. This is a topic I know you're all passionate about. How do you see it was placed in the financial inclusion space, and what do you think is next for workers' financial inclusion in connection to EWA? I'll start with Pradyo. 1 minute, Pradyo. Really, we need to wrap up.
Yeah. No. I think for me, it's just this is a product that seems to give users a lot of control or enables control over their finances. So from that point of view, it is a very promising start. And I agree with the fact that we need to keep centering these voices as we move ahead in developing this product, because at the end of the day, it allows them the control, but then from there, it's just about ensuring that it's responsible control, responsible usage, and that's something that we should focus on longer term. But from our side, from the research, it looks like a promising product, and we just would love to learn more about it.
Thank you. Soumya.
Yeah, I would say, to continue Pradyot's points, to exercise control, one needs to also be capable, and that capability building should also go along. And this is what we are doing in our next study, where we are also doing a budget management tool along with the EWA product, and then seeing that in the long run, if that is building more financial well-being. And this is one of the things that we are geared towards. And I think this would make more impact for the workers as well.
Thank you so much. Licia.
Two things. The first is we need a tripartite working group on all of this. It's a paradox. I mean, we promise to reduce financial stress, but then it might also alter employment relationships. So it requires a dialogue that goes beyond the fintech features and regulatory compliance, but maybe a deeper question: what kind of employment relationship do we want to build for our digital economy?
Thanks a lot. Alex, I know Paywatch is a very innovative company, so I am eager to know what's coming next.
Oh, I'm sorry to. Hopefully, I don't disappoint, but actually, I actually think that what Lisha mentioned many times during the seminar on the regulatory clarity will be very important in order to make sure that all of this is deployed in a responsible manner. Companies are, and more regulation is actually good for this industry. It'll make sure that everybody's structuring the product responsibly, people are using it responsibly, and employers will also become more comfortable in deploying it as well. So we're hoping for that, and we actually see it coming in the next couple of years as well.
Yes, we hope so too, and we are up to the challenge. Craig, what are your main takeaways from this 1 hour discussion?
How much time do you have?
Oh, 1 hour. You have an extra, I know.
So really interesting conversation. Thank you all, panelists, for a great introduction to the AWA. My important takeaway is that this is really has the potential to be a win-win-win solution for benefiting workers, benefiting employers, and presumably benefiting the fintech company. I don't think we got into the financials of the fintech companies and how they benefit from it. But presumably that's in there somewhere if they've got if they're well capitalized, I guess is the guidance. But in order for it to meet that criteria to be the win-win-win scenarios, it really is necessary to understand the needs of both the employers and the workers. That it's not one size fits all. That you need to adapt it to the needs of both the employers and the workers, and make it work for them. Really interesting to see this as an entry level way to get into the financial system, to develop your credit history, to be able to get the confidence in using the financial system that we were hearing from some of the panelists, and that's an important part. If one of the objective is for workers to be able to use the financial system more effectively, then this is an attractive way of getting them involved. But really recognizing the risks that are associated with it, and figuring out how to tackle those risks, whether the regulatory risks, whether the technology risks. Certainly the financial education sounds like a really important element, making sure that workers have the ability to use the service effectively, and lots of warning signs about over-reliance on the service, I think is an important factor that we should take into consideration and put in some safeguards to make sure that over-reliance doesn't become part of the problem. So with that, I want to thank everybody for an excellent session, and Andre, back to you.
Yes, well, thank you very much. Thank you for all the panelists. I also want to invite those who are here today to come back next Tuesday at the same time, 2 p.m. Geneva time. We will have a conversation on regulation, which it was Alex's last call. And we will have the International Trade Union Confederation, CGAP, FinHabits, a labor law expert, and the International Organization of Employers, all together discussing how we go about regulating earned wage access and also the role of social dialogue. Well, thank you all very much, and I hope to see you next Tuesday.
Thank you, everybody.